there's no one there.
So what's up, you guys? It's Benson right here. I'm super excited to bring you today's video. And in today's video, I'm just going to be talking about something that has really been a challenge. Yeah, even for me, I'm not going to lie. Yeah, I faced this long while I was starting out. Like, it took me a long time to even this out. And I'm also going to be recommending what I did to get out of that and what you should be doing. And that is fear of missing out, what is popularly referred to as FOMO. Fear of missing out happens in trading whenever you actually anticipated to go short, maybe at some price level. You already did your analysis that whenever price gets to this certain level, yeah, I'm going to go short. So price never really get there, but it got to that zone. From there, it started looking that it was going to go short. So you feel, oh, your analysis was wrong. Then you hop on price at that point. You make an instant execution where price is already at selling. So from just after you finish shorting the market and price start reversing and back to the point and take off your stop loss and goes directly to the point where you actually analyze that price will get to, and from there it starts dropping. So how do you eliminate this? This keep happening on and on. So how do you eliminate this? I also faced this too while starting out. So that's the reason why I'm making this video, to put you right in track and also to make sure you are not repeating the same mistake. So if you've got any other video request that you would like me to make, drop that in the comment section below. I'm definitely going to make that for you, whether it's regarding proprietary firm funding, whether it's regarding any basic, advanced, intermediate Forex questions. So go ahead and do that. Let's get straight to the video of today without wasting too much of your time. So let's go. Just yesterday, I had this entry, okay, but I wasn't able to enter, but my guys whom we were live together on trading session got this entry exactly. So from on this point, yeah, we shot up at this point, but I missed this entry. Now, there's one thing that you should know about FOMO. Now, here's what I mean by FOMO, all right? There are some market condition where there are some certain condition times that price tilts off at this point, this box that I drew, okay? There's always 3 times opportunity that market offer for you to go short or for you to go long at that particular time. All right, that's if your analysis is correct. Like from this point, this was the first opportunity for us to go short. It has to do like correction, come back again, correction. Like sometimes it gives 3 to 4 like opportunities for you to go to the direction where it's about to go to. So this was 1, and here, right here, it was the second point to go short, and here was the 3rd point to go short. So there are only 3 opportunities for you to go short. So you could have either entered here. If you miss this, then this one is here, and if you miss this, this one is always here. But the thing is, if you are looking to short a market, do not go short just right at this point. Yeah, at this point, when it's strong, when it has a strong bearish momentum. No, you have to wait for a bullish move. Yeah, a retracement. That's the best price to get in. So you short at this point. Then whenever price move, then you are going to be in profit no time with little to no drawdown. All right. So maybe whenever you are short at this point, yeah, your stop loss should be somewhere around here, a little bit above the recent high. All right. So I'm sorry, I don't know if the microphone is catching the background noise because there are a lot of people out there. They are engaging in sporting activities, and I'm sorry if that noise is in this video. I don't know. I'm just saying. One very good way to eliminate FOMO, fear of missing out, is actually having a trading plan. All right. You want to have your trading plan. If X, Y happen, I'm going to do Z. If A, B happen, I'm going to do C. That's the best way to trade. All right. I want to encourage you to get yourself a trading plan, yeah, a trading journal, and you document your strategy. Whether you are using a technical base or fundamental strategy, or in technical strategy, maybe you are using trend line, or you're using price action, you're using indicators, RSI, anything at all that you're using, just make sure you write it out. But I always recommend you have 2 to 3 confluences before you hop on a trade. What I mean by confluences is you need trend line to tell you to sell. You need maybe trend line, you're using psychological level, or any other indicator that you use, maybe RSI, TDR, or any other thing that you use at all. You need at least 3 things to confirm your bias before you go. And we don't really like act after price. Instead, we just wait for price to act, then we react. That's just how basically we just trade. So you notice the way I'm saying, we don't know for sure or certain where price is going to head to. We don't even try to predict, all right? We just look out for price action, what price action is seen at a particular time, yeah, and we react accordingly, all right? So that's how trading is meant to be. So it's not always about predicting what future price will be. It's looking at what price is currently doing right now, yeah, and you react. And always respect your plan, all right? I always tell my people, my students on Instagram, Telegram, everywhere, and even here on YouTube, that whenever you're already in a trade and you start thinking that's a wrong approach, you shouldn't think when you're already in a trade, or instead you should think before you get on a trade. You think of your risk management, your money management, how much you set to risk in that particular trade. If you want to risk 2% of your account, 1% of your account, or 0.5% of your account, that should be determined before you hop on the trade. That's actually the best way to go about things. All right, because whereas when you're in the trade, you would be emotional. You can take irrational decisions, which you would normally not have even predetermined before you get into that trade, like adjusting stop losses, getting into trades when it has not gotten to your level, and all of these things brings about losses overall and make you lose account. All right. So, and I also want you to just sit down, take account of your actions whenever you're in the forex market, whenever you're in the market, whenever you're in a trade. How do you behave? All right. This is where the psychology comes in. How do you behave? Are you really very tensed? And whenever you are tensed, do you tend to close out your trades even before you hit your stop loss or before you hit your take profits? So these are the things that you have to keep track of. And when you keep track of that, yeah, document it down, write it down, and you make sure you know what you're doing whenever you are in your winning streaks, and try to replicate that. And what you are doing when you're in your losing streak, try to eliminate that. Yeah, that, as simple as it sounds, trust me, in action, in reality, it's not that simple. Yep, I know there are tons of videos out there talking about this psychology thingy, talking about fear of missing out and all of that, but what I just wanted to do, I want to challenge you to let this video to be a push to you to go take action, because you can watch multiple and thousands of videos. They will really not make effect if you don't act. So that's why it all still boils down to you. You really have to do. All right, make sure right now, I want this video to challenge you to do one thing: create a plan. Create a plan, and you stick to the plan. Number 2, stick to the plan. And number 3, stick to the plan again. So that's what you should be doing, and put that on a repeat. Trust me, your success would be very astronomical. All right. So that's it today on fear of missing out. Make sure you don't hop on trades because you feel the candles are already moving far away from you without it getting to your formal analysis. Always trust your analysis. Wait for your analysis to play out. And what happens if price never really gets to your zone? Just let the trade go. Let the trade go. So that's how it works. Like yesterday, I had this opportunity right here on my screen. I wanted to go short. I already have this box drawn out here. This box drawn out because I felt there was psychological level right there. All right. And there was low of the week close by, and there's always weak reactions before price go up, down, and it has to form an M. So I had this first entry, but I didn't get to enter because it didn't really get into the box. All right. And this second entry also came up. I didn't really enter. I didn't enter too, because I was still anticipating for price to get to this box. Now, your question would be, what if price never really go back to this point again? What would you have done? Simple. I wouldn't have taken that trade for that day. Then it didn't really meet my criteria. So that's one thing you have to know. You always have to know that you can't always get it right all the time. Your analysis will not always be right, and you shouldn't be in every opportunity. Yeah, there's some opportunities that are meant for you, and the one that are meant for you will change your life. All right. So when price got into this point, yeah, what did I do? I was really so sure. So I went crazy with the trade, and moreover, it formed an M. Like there's a little M pattern right here. So from here, we had a dunk to the downside. So that was how I called this trade just yesterday. So I believe you guys understand what fear of missing out is. So now, if I had fear of missing out, if I never had my fear of missing out tackled, yeah, I probably would have just entered in right here. Yeah, upon the close of this candle. Oh, this is already a move in my direction. So let me hop on at this point. Yeah, that would have been a very bad entry. Although I would have had this move to the downside, yeah, but I don't think I would have wanted to take profit right here, because I always look to target like 30 to 40 pips, because based on how the market is moving these days, all right, and market will just go down, play with my emotions, and probably hit my stop loss on this huge reversal, all right. Hi guys, I would like to tell you a little bit about the broker that I use, which is FBS. FBS is a regulated broker that I use, and many other people across the globe uses them. So I would like you guys to check them out. Link is in the description box. I'm also going to be including it in the comment section. All right, you can click on the link to sign up right now to get double of your deposit. The best thing is you just wait for your analysis price to get to your zone where you already marked out, yeah, and you short from that point or you long from that point, depending on the kind of market you're trading at that particular time. All right, so that's it on today's video. I want you guys to hit the like button, subscribe if you find this video very informative, and also share with friends and loved ones. So guys, see you in the next one.
Until you break my